Thank you for joining me. My name is Tandin Tlapo, and today we are looking at Grade 10 Finance, Banking, Loans and Investments. Did you know that a loan is a debt incurred by an individual as an agreement between the lender and the borrower? An investment is used to save money to accumulate an interest. By the end of this lesson, you should be able to determine and calculate different concepts in the financial document using the given figures. Read, analyze, and interpret information in the statement according to the given context. And lastly, you should be able to differentiate between the two concepts, which is the debit and credit. Right, so now let us look at the concepts that we'll be looking at. Firstly, we will determine and calculate different concepts in a financial document. Read, analyze, and interpret information in a statement and differentiate between a debit and a credit. By now, you should be able to calculate interest earned on an investment or to be paid on a loan. Now, let us look at the examples of what you should know by now. Looking at the interest, we have example A. It says here, if 10,000, so 10,000 is the total amount that it's invested. We have invested 10,000 at an interest rate of 11% per annum. Per annum, remember it stands for per year. Now the question says, calculate the interest earned on this investment. So firstly, remember what you need to know. You start with what you know so that you can find what you do not know. So now what we are given here, we are given a total amount or a value of 10,000 that is to be invested at an interest rate of 11%. So 11% can also be written as 11 over 100. Then this will give you a total amount of 1,100 if you work that out on your calculator. So this is the interest that has been earned on this investment. Right, so now we are looking at number B. It says here, if an amount of 25,000 was taken as a loan to be paid back in a period of 1 year, meaning it should be paid over 12 months at an interest rate of 6.9% per annum. Calculate the total amount to be paid back, including VAT. So meaning our final answer should take us to the total amount that will be paid back at the end of this period, of which it's a period of 1 year. So firstly, we start by writing what we know or what we are given. We are given an amount of 25,000 that will be taken as a loan at an interest rate of 6.9, so 6.9%. So working that out, it's going to give us 1,725. So this is what is our interest. And the question, remember, says we must calculate the total. So it means this is only the interest. Now you still have to continue and say total. So your total amount will be the amount taken as a loan, which is 25,000, adding the interest that will be charged on this loan. So this will be 1,725. So when we add those together, and that give us a total amount of 26,725, meaning by the end of this period, this person would pay back a total amount of 26,725. So now we are looking at the new terminology that you should be remembering on this topic. Firstly, it will be a balance. Now, a balance, it's simply the difference between the credit and the debit. It means that on your bank balance, there will be a difference between the money deposited and the money that will be taken out of the account. And we also have the opening balance. It's the money brought forward at the beginning of the accounting period, as well as a closing balance, amount of funds available at the end of the accounting period. Now you should remember that these two, of which is the opening balance and the closing balance, are not transactions because they do not make any change in your banking balance, but they only show you at the beginning of your accounting period as well as at the end of your accounting period, the total amount that is in your account. Credit, it's an amount deposited into an account, as well as a debit, it's the money taken out of the account. So you should be able to differentiate between those two and not confuse them. Then we have a stop order. It is an agreement between two parties to make a series of future dated recurring payments. And we have the banking fees. It's the amount of money charged on transaction in an account. So for every activity that will be happening in your bank account, there'll be a fee to be paid. And we also have our term, which is transaction. Any activity happening in your account, whether you are buying airtime, you are making a transfer, your money is being deposited or taken out, it forms part of the transaction. Then we have a period or a time frame. It is the time taken to pay back a loan or the time investment to accumulate an interest. And lastly, we have a negative value. So when in your banking statement or in any financial document, there's an amount that appears to be negative, it means that you'll be owing the bank. Therefore, next to that amount, there'll be a negative sign. It means that you have used more than what you have in your bank account. Right, so now we are going to take a quick ad break. Don't go anywhere, we will be right back.